traders, welcome back. It is Thursday. I just wanted to make this quick video because I had a nice day. I had about a $1,500 day today, so that was cool. But specifically I wanted to go over a couple of things. The first of which being I made almost $450 on just 3 contracts on the Qs today, and I'll get into that a little bit in a second when I do a screen share for you. But the second and more important lesson for today comes back to something that I will frequently mention over and over again, both in my book and in my video course and on the videos on this channel, which is don't trade scared and don't trade greedy. And what happened today was an example of me benefiting from not trading scared. And what happened, I will again get into this in the screen share in a minute, is I had a trade open. I opened up a trade on Tuesday on Amazon, opened up a number of contracts, and it went against me, and I was losing money, and I was losing for 2 whole days, Tuesday and yesterday. And at points during that time, it was actually like pretty scary. I was down a lot. I was down pretty big. And you know, of course, part of me is thinking, man, I should just exit the trade. I should exit for a loss. But then I actually looked at the chart and I put more pieces of information together based on what I saw on the chart. And it's like what I keep saying over and over again, you need to take multiple pieces of information, put all the information together, and then make your moves based on all of that information. You need to be like a detective when you're trading. The whole thing is a mystery, and you're always trying to unravel the mystery. And a lot of times the clues to the mystery are right there in front of you on the chart and in the candlesticks. And so because I took a look at the bigger picture, I didn't stop out. I said, I think this is going to turn around based on this, that, and the other, which I'll get into in a second. But the point is, I didn't close out my position. I kept it open. And then today, that position that was losing me money for 2 days straight turned around and made me over $1,000 today. So I made about $1,000 on Amazon today and $450 on the Qs. And then I closed one of my short contracts that I have on DJT, and I still have 2 more that I'm planning on keeping until maybe tomorrow or possibly next week if I don't see the right moment tomorrow. But the point is, you know, there's a million different ways that you can be successful doing this. I mean, I was successful in one way, just open and shut today on the Qs. Everything, I opened it up in the morning, I closed it throughout the day. And then the other way you can be successful is, you know, if you just sort of stay in it for as long as your analysis tells you that you should stay in it, you can be successful. And you know, it's weird making these videos trying to like teach people how to do this, because there really isn't just one way to do it. And you know, anybody that says I have the only way to do it, they're full of shit. And run away as fast as you can if you see somebody on here proclaiming to be some sort of guru and telling you that their way is the only way that you're going to be successful, and if you do anything else, you're doomed to fail. That's full of shit. There's a million different ways that you can be successful. So the preferred way is what I did with the Qs today, which is open it up and close it in the same day. when it works out for you like that, that's perfect. That's the ideal scenario. Day trading, in and out in the same day. Sometimes that won't work. Like, for me with this Amazon trade, I was losing money for 2 days. And of course I didn't want to keep the trade open 2 extra days that I didn't have to keep it open. I wanted to make money right from the start, close it immediately like what I usually do. But that didn't work out, because things don't always work out exactly how you want. But the point is, even if something is not working out exactly like how you want it to right when you open up the position, look at the charts and be honest with yourself and say, is this something that I need to close now, or is this something that has a reasonable chance of working if I just give it a little bit of time? And then obviously you have to deal with the the time decay factor. Like, it's Thursday today and all of these Amazon contracts expire tomorrow. So yeah, I could have held it open another day and maybe squeezed a little bit more profit out of it, like if we gapped up tomorrow. But also, we could potentially gap down before tomorrow. And then that gap down plus the amount that I'd be losing on the theta would mean that, I'd be really screwed tomorrow. So there's the don't trade greedy part of the equation. So I wasn't scared for the last 2 days, and I wasn't greedy today. And because of all of that, putting it together, I made $1,000 on my Amazon contracts and, $450 on Qs today. So it was a good day. And now I'm going to get into the screen share and just break it down like step by step for you. Okay, now we're going to talk a little more in depth about my Amazon and my Q trades, why I got into them, especially the Amazon one, why I held for so long. Okay, so right now I'm going to put up the screenshot of my actual trades today, my entries and exits. So I won't leave this up for too long. You can pause the video if you want to check it out and do the pixel peeping yourself on there. You'll see that for a lot of the Amazon trades, I actually closed them out around 11 a.m. And that's because I was actually at the gym at that time. And like I was saying on one of my earlier videos, it's pretty easy to trade on your phone, as long as you kind of learn how the mobile app works and you just set your alerts. And then if an alert goes off, you check out the charts. And yeah, I mean, it's not going to be as good as looking at everything on a nice big monitor, but you can still get your charts up and see what's going on. And then if you're out and about and an alert goes off and you decide that you want to close some positions or open some positions, you can totally do it on your phone. So this afternoon, well, not this afternoon, this morning, I should say, it was still pretty early, around 11 a.m., I closed some of my contracts while I was out. But anyway, let's check out the left side here. You see I've got Amazon up. And I'll tell you right about where I got in on Tuesday, right at this kind of big doji candle right here. Now, I've got the hour candles on this chart right here. So you can see right here, we've got this big doji candle. And in this time frame, I saw this real volatile price action developing. And at the time, I thought that what was going to happen is we were just going to rip and take off. So I saw this, I saw this action right here in pre-market. We fell out, we came up, came back down. I thought that we were going to bounce off. Now, if you kind of take a look and I make a trend line, I can make a trend line like this. I basically thought right around here that we were going to bounce off this trend line and we were going to extend up. Well, I was wrong. That didn't happen. So I got in sizable amount of contracts. Pretty much most of the day on Tuesday, as you can see, with the exception of the last hour of the day, I was losing money. I got some back at the end of the day, but I held in. Now, overnight and especially pre-market, the very, last hour before we opened up, this is when the CPI data came out and everything just fell out so hard. But then we came back real strong right at the open. Obviously, during the very first hour of Wednesday was, my worst time in this whole trade when I was down the most. But the reason that I didn't get out of the trade right when we opened up is because, this is a serious anomaly right here. This candle, this is not the type of thing that is going to give you any sort of a continuation. This is like really, really unusual. And I knew that we weren't going to see a candle that looked like this, going from 181 to 186 in one candle, 1 hour's worth of time, essentially. I knew that we weren't going to have that and then just continue to fall throughout the day. So I figured that price was going to come back on us. And, it did. Like from the first moment that we were open yesterday, price started coming back. But you'll see this red price level line that I set right here. This is one of the reasons why I didn't actually stop out, because this is my level right here. This is my actual important level. And you could say, well, you were below that level when you opened up here. Yeah, I was below that level. But like I just said, I knew that we were going to retrace fairly significantly, and I wanted to wait until that happened and then see what was going to happen. So if we had come up and kind of played around this level and then rejected it again, if we had basically bumped up against this line and then rejected it, at that point I would have definitely stopped out, because I would have thought, okay, this is my significant resistance level right here, and it wasn't able to break through it. And so that this would mean that we were going to continue on the way down. But we didn't do that. We kept, going up, and then we had some hiccups here kind of towards the end of the day, and then it rallied pretty hard at the end of the day yesterday. And then today, it's just been a pretty phenomenal day all day long. We fell out a little bit right at the beginning of the day, but then we just kept pushing up and up and up and up. And so, in the middle of the day, in the middle of this afternoon, like right around here during these couple of hours, this is where I closed out a majority of my contracts. So, while I would have lost money if I had been scared and closed out right here, and I would have also lost money if I had been scared and closed out here, I didn't do that. I stayed in because I saw this level right here and I identified that as a very valid, important level. So I stayed in. And, because of that, I was able to ride this today. And then before we got this last hour candle where we kind of fell out again, I got out everything. I wasn't greedy. I wasn't thinking that we were going to just continue to shoot up, to the moon with it. I got out. I wasn't greedy because, we might gap up overnight and then tomorrow we may open up over here, but we very well might do another one of these other overnight scenarios where we either gap down or we just kind of don't move. And with the theta decay and tomorrow being Friday and being expiry day, that theta is going to hit me a lot harder overnight tonight than it was hitting me overnight, on Tuesday night or on Wednesday night. So I definitely wanted to get out knowing that I was up $1,000. Don't get greedy. That's $1,000. That's really good. So one last thing before we go over to the Qs. Check this out. Here's another thing. The 200 EMA, one of the, if not the most important exponential moving average that I always keep up on all of my charts. You can see we pretty much touched it here before we took off. This huge washout candle, we actually touched the 200 EMA and then bounced off of it. Overnight, last night, broke through it a little bit, but just, slightly. The 200 EMA is always something that you should look at, and more often than not, it's going to give you some clues and provide some information as to where price action could go, or at least how much confidence you can have in what you want to do. So like when I was looking at this area right here, I wasn't just looking at the chart with no indicators on it. I obviously had the 200 EMA on here, and I saw that we had bounced off of the 200, and that gave me more confidence that we would come up and retrace from that huge washout candle over there. Okay, so now let's look at the right side here. We've got the Qs. I've got the daily chart up on the Qs, and before we opened up this morning, I had a pretty strong feeling that we were going to have this type of day that we did end up having. Now, I had no idea exactly how strong the day would be, but I definitely had a lot of conviction that it was going to be green on the day. And one of the reasons why I thought this, now we're zoomed in fairly close to the action on the daily chart here. This is like the last couple of weeks of action. And you can see that we've been ranging. It's been, up, down, up, down. So the things that really told me that today was going to be this type of day, you look at 2 days ago on Tuesday. It was a red day, but more importantly than it being a red day is this really, really long lower wick on the daily candle. That means that price tried to come down, but it still closed just a little bit lower than when it opened. And then we gapped down, but you'll see that yesterday we closed higher than when we opened. So if we kind of get really zoomed in on this, this is basically like the bouncing ball effect. We were here, come down, and we're bouncing. So I thought that we were going to get a bounce. And then also, if you want to do trend lines on the daily, you can see that we're trending up on our trend lines within the last couple of weeks. So I really thought that this was the type of day that we were going to have. And I only got 3 contracts on the Q, but you don't need a ton of contracts. As long as you can see the patterns developing, that's the main thing. Let me change it up to the minute candles, and let me add the 200 EMA. Change that to 200. Change this to white. Make it a little thicker, easy to see. Okay, so here is the only time during the day that we actually broke below this 200. I got in, as you can see, if you go back to my detailed entries and exits, I got in today on the first minute of the day, which is actually kind of rare for me. And it was a mistake, honestly. I should have waited longer than I did. I thought that we were essentially going to, if I make a price level, I thought that in the first minute we were going to bounce off of this and come up. Essentially what happened is kind of what I thought was going to happen, but in between the bigger move, we had this smaller little hiccup that I can identify right here. This part, this is what I did not want to happen, but it did happen. But not a big deal, because my actual stop out level on this trade was down here where you see this red line, approximately this area. Because if we go left, we can see that same level, the same price level that I identified that would be my stop out point, if we go left, was also right around the low of day yesterday that we touched on multiple times. So we've got a support level. We've got a support level. You see price touching on or near that level multiple times yesterday. So that would have been my stop out level. If we had broken below this, I would have definitely stopped out and lost money on that trade. But we didn't do that. And with the exception of this little hiccup right here where we did break below the 200, obviously I didn't like this moment, but I didn't freak out because we still had a little bit more room to go before I would have, really thought I'm going to stop out now. Instead, we turned it around and then just played above the 200 and kept on rising all day long. It was basically a completely solid green day after 9:15 a.m. I didn't trade this perfectly. I should have waited a little longer, but at the same time, I don't feel like I really screwed up either, because in the end, what I thought would happen did happen. It just didn't happen exactly when I thought it would happen, which, it's extremely rare that everything will happen exactly as you think it will happen in the time frame that you think it will happen. If whenever that does happen, and it does occasionally happen, you are completely winning when that happens. So don't beat yourself up when everything doesn't go 100% to plan, because there will be plenty of times when things don't go 100% to plan. And the point is, you can still make a lot of money even when things don't go exactly as planned. It's more about seeing the big picture. That's what it is. Seeing the big picture is identifying this level right here, identifying where price is in relation to the 200. Seeing the big picture is noticing where price is playing in relation to this support level right here, not, simply zooming in and, I get in here at 9 a.m. and then I've freaked out and I'm out by 10 or 11 just because price went against me a little bit. That's not the way to be consistently successful. That would be trading scared. Once again, I feel like a broken record when I say don't trade scared and don't trade greedy. Even as I record this at almost 7 p.m. on Thursday evening, we see that price has fallen out on Amazon. So if I had, thought, I'm going to hold and hold and hold overnight, well, there's a good chance that we're going to open up lower than where we closed today. And, that plus the theta decay would really screw me. So I'm happy that I got out with my $1,000 of profit right around here. All right, we're back. Thanks again for watching. Hope you enjoyed it. Hope you learned a little something. If you haven't already, please hit the like and subscribe button. I'm sure that every little bit helps the channel. Like, I'm no YouTube professional, but I know that the more subscribers and likes you get, the more that YouTube likes that. And obviously I'm trying to grow the channel. So if you haven't already done that, please do it. And then once again, if you want to get my book, Secrets of the Lone Wolf Trader, that's available on Amazon. Or if you really want to take it to the next level and get over 7 hours worth of individualized education, you can go on lonewolftradingclub.com and get my complete video course where I break down exactly what I do every single day. So thanks again for watching. See you next time.